Welcome to this edition of IG's Trading the Markets podcast. I'm Jeremy Naylor. Today we're discussing how someone can develop an efficient trading strategy. Now, if you put into an internet search engine, efficient trading strategies to be able to make money from the markets, no less than 209 million results are returned. Now, you could trawl through those that you think make most sense to you, or you could just ask someone. Well, we thought we'd ask someone that's done it all before, someone that has a track record, and in the case of our guest today, someone that keeps doing it. He also has his own regular show, the How to Trade It podcast. Welcome, Casey Stubbs. Casey, good to talk to you. Thanks indeed for your time today.
Thanks, Jeremy. I'm excited to be here.
Well, look, I think quite possibly this is the most asked question, certainly from newbies to trading, but also those that have gone through the first stage and perhaps maybe possibly lost it all, but still understand that if you can get a grip on the fundamentals of trading, it's there in front of you to be taken. How did you get started?
Oh, I got started way back a long time ago. Well, not that long because I'm not that old, but in the 90s, my dad was interested in stocks and he was a stock trader, and I was a young kid, a teenager, computer nerd. And so I was really into the computers, and my dad realized that you could now start doing stock trading online. First time ever, even before internet was really widely accepted. And so he needed help getting his stock trading onto the computer. And so I went through and I showed him how to set it all up. And we got him up and running on the computer with his stock trading. And I was like, wow, as a young man who didn't know anything about the markets at all, I thought this is really cool. And so from that point forward, I started to do research along with my dad and started relatively young that way.
It seems to me that there is a distinction between creating a trading strategy and creating a trading strategy that makes money. Is that fair to say that? Are these two statements closely connected, or are they far apart?
Well, it's very simple to create a strategy. And there are so many strategies that will work successfully. But the key really is to find the ones that work and then use them. And your statement is absolutely right. There's a lot of strategies that don't work. But I believe that any strategy can be optimized and improved to create successful performance. But there's also another statement that is really difficult to get a handle of. Just because you have a good strategy doesn't mean that you're going to make money, because you actually have to follow the strategy. And that tends to be the most difficult part for people to get their mind around.
So how should we start in terms of perhaps maybe expectations? People listening to this who've not done it before, or those, as I said, that have tried and failed, but still nonetheless know it's possible to do it. How should one start out on the path to becoming a successful trader?
Okay, so one of the things that you mentioned, Jeremy, is you said the expectation. I think expectation is a really important thing. Whatever you're doing in life, my philosophy is that you should work for success, but not try to have your expectations so high so fast. I really believe in dreams and following your dreams and big goals and all of that stuff, but I do it in bite-sized chunks. So when you're looking at getting started, I would say keep your expectations small and then just look at it as a ladder. Okay, I'm going to take my first step, and then from there, I'm going to take my next step, and then I'm going to take my next step. And that helps to keep your discouragement in check, because if you're going for big results, then you get shot down, you can get discouraged and depression can set in. Then it can cause you to create bad decision making, and then you end up hitting this cycle of destruction or bad trading decisions. So expectations, I would say, keep low and tier them. Do short-term goals like, okay, for this month, I just want to see if I can follow my strategy for the month. And sometimes just the process itself is the most important part rather than the results. Usually trading and personal life goes hand in hand. So I am focused on my life as processes, right? Like I want to do certain things in a certain order. And if I can do those things, then the results will come later on. But we focus on the process first. So as a trader, the very first thing your expectation should be is not even really focusing on results, but on developing your strategy, making sure that you have a trading process that you're following consistently. And once you get that down, then the results will begin to come as time goes on.
Now, not only are you a trader and you have a long history of trading the markets, you're also a teacher. As a teacher, why can't I just come to you and say, what's your strategy? I want to use it. I want to adopt that same strategy. Would that not work?
It does work, but again, it focuses on the process. So if you get a strategy and you want to follow my strategy, you really have to make sure that you understand the fundamentals behind it, because it's really a mental exercise in consistency, right? So you can find a good trade. Everybody's focused on the hot tip or the good trade or winning trades, but that's really not what makes trading successful. But it's being consistent over a long period of time, doing the same thing over and over again, and then slowly improving that process as time goes on. And then after you do it, your success becomes momentum. You start to build momentum, and then your success grows as time goes on.
How important is it thereafter to make sure you focus in on one particular area? I mean, I've heard it said from technical analysts that a chart is a chart is a chart. Look, they're all going the same. So long as it's liquid, so long as you've got a liquid contribution to the numbers, in other words, lots of people are trading that and it's liquid, any technical analyst can tell you how to trade a chart. If that's the case, why do I hear it often said that, oh yeah, I'm an FX trader, or I'm an equities trader, or I'm an options trader? Why can we not just be a market trader?
I think there are traders that trade both markets or multiple markets. I personally do trade multiple markets. I actually trade crypto, I trade FX, and I also trade stocks. But one of the things is the type of strategy you have. If you're really focused and you're doing day trades and you're trading a lot, it's hard to jump around in multiple markets because your focus is so intense. But if you're more of a long-term trader and you're only holding a couple trades at a time, you can have more time to scan multiple markets and try to find better setups that way. But again, when you laser focus in on things, that also helps you to really get in tune with what you're doing and helps you to get your process down. Even though the markets are very similar and the charts are very similar and a lot of the things are technically the same, there are some small differences that can make a big difference in your trading results once you learn to master those areas.
So those people I was talking to that are, as I say, they are focused particularly on a certain market. Most of them tend to have been around a while in the markets. For someone setting out, do you suggest that they focus on one particular market, or do you think someone setting out ought to experience the wide variety of opportunities and different sort of fundamentals that go into a chart movement and so forth? Do you encourage a wider horizon to begin with?
You know, when you're starting out, the main thing is just to pick one. And I would say to look at just do your research. So when you said a wide horizon, I would say do your research on all of the different markets. You know, go look into the stock markets and see if stock trading would be right for you. Look at the forex market and see, just do a little bit of research. And then once you make your decision, then try it out and see if that market works for you. If it doesn't, you can then move on to something else, but keep working at it until you find something that fits for you.
What about time frames? How important is it to establish a time frame for your trades? I quite often hear a day trader saying, "Oh yeah, I'm going to close out the trades at the end of the day." But I know as well that trader could potentially miss out on something if it's a trend in place and there's an overnight position to be taken and made a profit of. Do you say pick your time period and stick to it? Or again, are you flexible in how you teach people into different time frames when you're taking a trade?
I'm pretty flexible. Here's the way I look at it. So first of all, you can trade really whatever time frame that you want, because I know a lot of different traders that do a lot of different things. Okay, I personally like longer term. I like to use the daily chart, and the reason I do that is just because of the time involved. I prefer to go in for 30 minutes, run some analysis, and then make trades and then be done with it. I don't want to sit in front of the charts for 4 hours, 5 hours making multiple trades. A lot of people prefer to do the laser focused extreme concentration of the short-term time frames and then be in and out by the end of the day, and they can make good gains that way. I personally don't want to put that much focus into it just for time constraints. But when you're developing a trading system, there's really some important things that you need to consider. And time frame is definitely one of those factors, but one of the things that you want to be looking at and tracking is your win rate. Okay, so win rate is really important. Like, what percentage of trades are you going to win with this strategy, right? And so there's a lot of different ways to talk about how to create entries. I really wouldn't even have time to talk about all of them in this show, just because you can use moving averages, you can move volume, you can use ATR, you can use trend lines, price action, MACD. There's thousands of different of ways to develop your strategy as far as your entry. But at the end of the day, the thing that really matters is your win rate, and you need to track that. So to get started, just pick a strategy somewhere and then start back testing it. And I'll talk about that in 1 second. But if you get your win rate, you just calculate it, you figure out what it is. The next thing that's really important is the size of those wins. So, and what I mean by that is the return of investment. So if you're taking trades and you have a 50% win rate, but your percent return is 1%, but the percent of your losses are 2%, then you're going to lose money. So you need to really focus on a size that will mathematically make sense in conjunction with your win rate. So if you're going to win 50% of the time, you need to have winners that are bigger than your losers. So your size of your wins, the size of your losses is really important. And then the last thing that's really important that a lot of people don't talk about, that's really critical for growing your profits, is the frequency of the trades, right? And that just means how many trades will this setup deliver? Because if you're trading a daily time frame and you're looking for some kind of movement in the market that's quite rare, and you only take one trade a month, well, then your results are going to be a lot lower because there's just not enough volume to generate profit. So when you're looking for your strategy, you want to try to find one that has a lot of trade setups so that you can then expand your profits if you're getting the success. Then the next thing that you would really want to do is to start back testing. So you pick out your criteria. You say, okay, I'm going to do a moving average crossover. When the 20 period moving average crosses the 50 period, then I'm going to take the trade. That's just a very basic setup. Well, now you go back and you look at the charts in the past, and you manually log those trades and say, okay, what would my win be? What would my loss be? And then you analyze those results. And then you look at your win rate, you look at the size of the wins, the size of the losses, and the frequency of those trades. And if you get a number that is profitable on the back test, that's still just the beginning, because now you have to do a forward test. And I recommend that you do forward testing on a demo account before you even launch a strategy. So you go from back testing, which is looking in the past, to forward testing, which is testing your strategy in a live environment before actually spending money. And then you forward test for, I would say, 3 months, and just see if you can consistently get profits in those 3 months. And then again, you look at your stats. You look at the win rate, the size of the wins, the size of the losses, and the frequency of the trades. And when you're analyzing those results, then if everything shakes out and looks good, then you can go ahead and move forward. And even while you're moving forward, you want to always be analyzing those numbers and doing a reporting system and looking at your trades and then making small changes. I recommend changing one thing at a time, and then testing it and seeing how the results are. Because in life and in trading, a lot of things work out the same, is that some of your trades are going to generate a lot more profits than the others, right? So in everything in our life, there's always things that produce a lot more. And so let me give an example for that. If I own a business and I have 100 employees. Probably 20% of those employees are going to produce 80% of the results. Those are the high achievers. And so you want to focus on working on those high achievers. And so in trading, a small percentage of your trades is going to produce the biggest percentage of your results. And so you want to find a way to duplicate those winning trades and those good trades and eliminate those losing trades. And it creates a feedback loop. And again, the way that people improve in life and in general, that's why I have mentors and coaches for everything I do in my life, whether it's my marriage, my trading, my business, whatever I'm in, I always have accountability and I have mentors. Why? Because I want them to give me feedback on my performance. Because if I'm just moving without any kind of feedback, then I'm not able to change and adjust. And that feedback is a critical component for results. So you need to have a way in there to analyze and to give yourself feedback so that you can adjust and continually improve.
Just you've mentioned a number of areas there. I just want to go back and talk, if I can, about some of those technical indicators you mentioned, like momentum, average true range, simple moving averages that give you a build-up of a picture of the movement of stocks and the chart you're looking at. Do you teach a broad range of technical analysis tools, or do you think it's the right thing to do to let a student go off and test them for themselves on their own strategy? I'm thinking because there are a lot of indicators. When I first started trading, I felt there were so many indicators and there were so many things that sort of converted what you were suggesting, and then there were indicators that went against what you were suggesting. And I found it difficult to filter out what worked and what didn't. How do you go about finding the right ones for yourself as a trader?
So the biggest thing is, again, that testing period. But I do like to give recommendation to people who are just getting started out, just because there's so much, like you said, there's so much to look into and there's so many different things. It is good for people to do the research on their own as well, because they can learn and get improve and advance their education. But at the same time, it can feel a little overwhelming. I've seen people have like 1,000 indicators on their chart and you can't even see what's going on. You want to limit it to a few key indicators. I don't recommend any more than 3 or 4 at any one time to determine your chart, to determine your trades. And sometimes people get really carried away. So it's good to give people a guideline and a path to follow so that they don't get overwhelmed.
Let's move on and take a look at one other area you mentioned. That is trying to find ways of mitigating losses and making sure that you keep with your profits. First of all, the psychology about trading is so difficult to overcome, isn't it, in the beginning? And I think I can remember quite clearly being really pleased with myself initially when I was a new trader. I'd made money and I closed out the position thinking that was good. And then at the end of the day, I realized that I'd missed out on a continuation of the money-making trend that I was on. I found it very difficult to overcome that. But at the same time, for some reason, I found it difficult to stop myself or to come out of a trade that was losing money. How do you get around that psychological block, if you like, to let those winning trades win and cut yourself out of those losing trades?
The thing that is the hardest for me to take the losing trades was just because I hated losing, and I always had this hope that it would turn around. I think that was probably the biggest thing, is because I was like, okay, I don't want to cut this because as soon as I cut it, it's going to turn around. Like for me, that was very difficult. I think the biggest thing that got me through it was to focus on the concept that the winners will carry you to greater profits. Just like I had mentioned, there's a small percentage of your trades. If any successful traders will go back and analyze their trades, there's usually a handful that produce the majority of the profits. Like there's the whales, the big winners, the ones, you got one trade that was like a 30% return and then the rest of were all small little gains. So once I learned that my biggest success is not in getting a lot of winners, but in finding the big ones and giving myself opportunity to get those big winners. And you never get what you don't target. So if you're not looking for the big winners, you're not going to find them. So that was my key. Is I realized it's a filter system, and I'm trying to get rid of all the bad trades and focus on finding the big ones. And so if I have to take some losers to get to those good ones, then I'm willing to do that. And it took me a long time to get to that place.
Yeah, this goes back to what you were saying, doesn't it, about the fact the volume of trades. And it didn't take me long to realize that if I put 10 trades on, I was quite happy to lose 9 if I got that one winner that just gave me complete profits throughout the day on my entire account. I think that's something that I learned fairly quickly. Just want to talk about mitigating losses and the strategies you put in place. I talked to a lot of IG clients, and the idea of stop losses comes up. How do you deal in limiting your losses? Do you put on stops, or do you just keep a tight hold on the trade and you decide when you come out the time is right to stop a loss yourself?
So I always use stops just because I've never been able to keep a tight handle on it, because I usually do something that I regret later. So I always use stops, and the way that I will sometimes get out of a trade before the stop. So there's a couple ways that I keep my losses small. So I usually keep a fairly wide stop in the beginning, but then as the trade gets in my favor, I tighten it up. And then another thing I do is, if it's going against me and my indicator will change, then, if the moving average changed direction, or there's something that's indicating a price change, then I will close the trade even before it gets to my stop loss. And then that helps keep my losses smaller. And so I would not recommend anyone trading without stops, especially in the currency market, just because of the leverage. If you're investing and you're holding stocks, that's a little different than when you're in currency trading.
Just one final sort of area I want to cover, and that is the way you've said, you write things down. To what degree do you write everything down? I mean, I'm not particularly good at this, I have to admit, and I guess this is probably one of the reasons why it's taking me so long to get to where I am in terms of my trading. How rigid are you in teaching the basic rule of writing things down and writing your strategy down in easy to understand steps?
I think it's really critical, and I always have my strategy written down and next to me at my desk so I can look at it. Even though I know it so well, I don't need to look at it, but I just do it just for the process and the habit. And another thing I really recommend is, analyzing your stats, looking at your wins and losses. Those there's a few key stats you want to look at. And I already mentioned a win rate, size of your wins, size of your losses, and your frequency. You want to really analyze those and look at them and base your future trades off of what you're seeing. So it's important to log that. What gets measured is what matters. And if you don't measure it, it's just a guessing game. And if you're playing a guessing game, you're not trading, you're gambling, and it's just not going to work. And so I really believe in logging, and even stepping away from the computer. I try to get outside of the digital world quite a bit. And that's part of what I said is a process just in life, a daily process. Is before I even sit down, I like to sit down at the table, turn my phone off, stay away from my phone, stay away from my computer, and just write down my thoughts on a notebook, talk about some of the trading things that happened, some other things in my life, and just get everything, just kind of unplug and decompress a little bit. And it's helped me out quite a bit.
One of the other areas I think is worth looking at potentially is the possibility about getting some sort of group together when doing this. I know of trading forums and so forth. Do you encourage people to use trading forums? I mean, clearly when you teach a cohort, they'll be moving along together, they'll be discussing things with each other. But when you're out by yourself, and quite often it has to be said that trading is a very solitary sort of environment, do you encourage people to associate? Do you encourage people to contribute and take stuff away from forums? Or do you think that could be the beginning of a corrosive relationship between yourself and your trading book?
Well, I think that forums can be a pretty tough environment, and I don't really recommend posting in forums, but I do recommend getting someone to be your accountability partner and trading with, and somebody that is really serious and is not afraid to tell you the truth. If you're going to be successful, you got to be willing to hear the truth about yourself and dive deep in, like, okay, you didn't follow your strategy, or, you have this big loss and you say you're only going to lose 1%. Why is there a 10% winner on this chart? I feel like I'm successful because I've done this. Okay. So every area of my life I do this, not just in trading. If I'm trying to lose weight, I have an accountability partner. I submit a spreadsheet to that person, and then they come back and they're like, well, why didn't you do this? Well, just knowing that I'm going to have to confront that person, that helps me stay in line. So I think people need to get together. They need to talk about the strategies. They need to hold each other accountable and get somebody who is serious and is going to hold you accountable. I think that's a really critical component. It's not necessary for some people, but for me, it really is.
Just want to leave everybody with one final thought. How do you encapsulate trading and the fun, the opportunities, the stress, and everything? What do you say to people as a sort of a quick sell for trading the markets?
Well, I think that trading is not stressful at all if you do it right, if you have a plan and you're following your strategy. And it's actually not really even exciting. It's really rather boring and non-stressful, because if the setup happens, you take the trade and the market does what it does, and you either win or lose. It gets stressful when you are gambling, when you're just guessing, when you're throwing in high value amounts, not keeping your risk down. So trading is a great source of revenue if you learn it the right way and you're serious about personal development, because really that's the only way that you're going to be successful, is because it's all about mastering yourself. If you can master yourself, then you can do it. If you can't, then it's going to be really tough.
Yeah, look, Casey, it's been a pleasure. We've got to leave it there, but thanks indeed for joining us. A keen insight into your world as a trader and a mentor. And Casey also has the regular show, the How to Trade It podcast. That's Casey Stubbs. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.